Hello, hello. I hope you're having a fantastic day today. So today I wanted to do a very basic introductory video on investing with a focus on ETFs, which if you don't know what that is, that's totally fine. If you're interested in investing, but you literally do not know where to start, this is the video for you. This is what I wish somebody had taught me when I was younger. So let's go ahead and get started. But before we get started, I just wanted to make sure you're aware this video is for educational purposes only and is not financial advice. When I was in my freshman year at high school, somebody came to my classroom and spoke about compound interest. And I thought, that sounds amazing. For those of you that don't know, compound interest is basically when your money is growing and earning interest significantly over a long period of time. Fast forward to 18, I was a single mom. I was putting myself through school and working. I didn't really have the disposable income to start a retirement or to start investing. So fast forward a few more years later, I was like, okay, I have some extra money. I'm ready to get started. I go online, I'm looking at bank accounts and retirement, and I'm not really finding anything because, again, I don't really know what I'm looking for. And so that's where we're going to get started today. There's a difference between a bank account, which consists of a checking and a savings account, which most of you should be familiar with, and what is referred to as a brokerage account. And a brokerage account is the accounts that you would open where you would have investments and retirement accounts. A few examples of brokerage accounts would be Vanguard, Fidelity, and Charles Schwab. Those are some of the most popular. But actually, why don't we go online and actually do a quick search and you can see what exactly you need to type into Google to find these different brokerage accounts. So I went to Google and I typed in top brokerage firms in the US, and the results came back that Vanguard, Charles Schwab, Fidelity, Bank of America, specifically Merrill Lynch, and JP Morgan are some of the top brokerage firms that you can choose from. A few things to consider when selecting a brokerage firm would be fees, account minimums, and investing options. Once you've selected a brokerage firm, there's different types of accounts that you can have. There are retirement accounts like IRAs and 401ks. Now the difference between those two, an IRA is not linked to your employer, whereas a 401k is linked with your employer. Then you have an individual brokerage account, which is an account that you can invest in where you do not have to wait until retirement age to pull those funds. And then there's a 529 plan for investing in your child's education. So when it comes to investing in general, there's different risk levels. So on the higher risk, you have things like cryptocurrency. On the low end, you have things like CDs, certificates of deposit, where you basically have your money that's locked in an account that earns a little bit more interest than a high yield savings account. And then you have ETFs, which are exchange traded funds. And this is more moderate, medium risk type investing. And this is what we're going to be discussing today. At this point, you've selected a brokerage firm, you have decided what type of account you want to start investing in, but now you need to decide what you actually want to invest in. And so today we're going to be talking about exchange traded funds, also known as ETFs, and what this is a basket of multiple different investments. So for example, instead of purchasing one stock of Apple, you could go and purchase an ETF, which is a basket of a variety of different businesses. And so this can reduce your risk because it's not linked to just one company. So let's go ahead and see what that actually looks like. So for this example, we're going to look at Vanguard ETFs. So I'm on their website. I'm going to go ahead and sort by risk. I'm going to select 4, which is moderate to aggressive funds. And then I'm going to sort by the expense ratio, which is associated to the fees charged. So that way we're going to have lower fees. So this is the lowest. So as you can see, it's VU S&P 500 ETF. And the S&P 500 is an ETF that tracks 500 of the most successful companies in the United States. So let's go ahead and do a quick Google search. I just did a search on S&P 500 ETF, and we can take a look over time. Let's see, that's one day. Let's look at 5 years and then max history. So we're looking at the S&P 500 for the last 5 years. You can see that there was this, gradual incline. There were some dips, but overall it's going up. Let's go ahead and look at max. And again, the same thing. So let's say if you were thinking about investing in a retirement account, you want to look at the long-term projected growth of an ETF. So again, this is just the S&P 500. It isn't specifically that VU ETF that we were just looking at. So let's look at that. This is Vanguard S&P 500 ETF VU Performance. Now this ETF started in 2010, so that's going to be as far back as the history is going to go. But let's look at the 5-year and then at the max history. You can see it goes back to 2010. All right, so I'm on the Vanguard website and I'm looking at the VU Vanguard S&P 500 ETF. And when you go to portfolio composition, you can see some of the companies that are within that ETF. So Microsoft, Apple, Amazon, Facebook, so quite a few companies that you're probably familiar with. Oh, and the last thing I want to show you, I went ahead and put in VU return since inception, and this will actually show you a percentage of return. A lot of times when people are talking about the return of the market, they use 7% as a baseline just because it can go up and it can go down. And so since its inception, the VU market price has increased by 14%. Now you have enough information where you can go and research different brokerage firms. You can decide what type of investment account you want to start, and you have a general understanding of an ETF and how to do a little bit more research on what types of funds might work for you and your family. But I have a few final thoughts that I want to share with you. First is a custodial account for kids under 18, because you have to be 18 to set up a brokerage account. If your teenagers are interested in contributing to their retirement, you can create a custodial account, and all you need to do once you select your brokerage firm is to give them a call, let them know that you want to start a custodial account. They'll ask you a few questions, and then they'll send you a packet of information that you'll fill out and sign and send back. The second thing I wanted to bring up, if you are interested in finding a financial advisor, I would recommend finding a flat fee fiduciary advisor. And what this means, the flat rate portion, basically instead of them charging a percentage of your returns, they would get a flat rate for the time that you work with them. And fiduciary just means that they have your best interest when they're giving you recommendations and financial suggestions. The best time to start was yesterday, but the next best time is today. And just a final reminder, this video is for educational purposes only and is not financial advice. If you have any questions, please let me know in the comments below, and have a fantastic day. Bye.